Alright, so I'm going to be reviewing the market for today, August 26th, 2025. Here we go. Let's make this big for 1 second. Alright, yeah, so anyway, I'm going to be reviewing the market here in this video, live stream. I'm going to do the market recap in just this bit, but first we're going to review everything that happened in general. And as well, we're just going to take notes and make observations and learn. So, with that, we ended up getting this buy model, and this is honestly exactly what I was expecting. If we go look at my journal from this morning, I really was expecting this, but I did not know when we were going to get there. And you can see that, it did not happen in the morning. So, what I'm talking about is this, right? I was looking at this being a possible higher time frame buy model. We had SMT. We had SMT with YM here. So anyway, let's just start taking notes here. So SMT with YM was at the low, I'm pretty sure. It was at wait, I guess we gotta switch it to the hourly chart. Let's switch it to the hourly chart real quick. Okay, so low, and then a higher low. It was this one, right? Wait, let me hang on a second. I'm looking at my other screen. We'll switch over to the other screen. So we had this low on all three assets, and then I guess it's not actually that obvious. I thought there was SMT. Oh, I was looking at this. Oh, yeah, never mind. It was obvious. It was right here. Yeah, it was right here and right here. Yeah, there we go. So the SMT was right here, and it was with YM. So, yep, we get SMT with YM, and this ended up holding. I thought we were maybe going to induce this low and keep the SMT, but that did not happen. So, anyway, SMT with YM here. Oh, I need to refresh the chat. I can't see it. What the heck? Why is it not even? It's not even letting me refresh the chat. I don't know why it's not letting me do that. I can't see the chat. If anyone said anything, I can't see it. I guess I'll just pull up my phone. That's kind of weird. Okay, pulling up chat on my phone, I guess. Yeah, no one said anything, but one person watching, that's pretty cool. So, yeah. Anyway, now I have chat on my phone, so if anyone says anything, I'll be able to see it. Before it was not showing up on my computer. So anyway, like I was saying, back to my main screen, right? Here you can see we had SMT with YM. We were honestly anticipating this to be a buy model. I thought maybe we could induce this low. Let's make a note of that real quick. Held. I thought maybe we would induce the low and the SMT would still hold, but that did not happen. Meaning, like, I thought maybe we would take the low and then the SMT would still hold, but we would get a liquidity sweep, but that did not happen. So anyway, just like taking notes of these things, literally like taking notes of everything. I think anything and everything you take note of is going to, add to your mental repertoire. So let's go ahead and screenshot this. We need to make a new folder for today, I think. If not, I think maybe we already have one for today. Oh, there was one. Yeah, we already have one for today. SMT with YM. You'll note that we got that there. So SMT with YM. And then once again, I was basically anticipating that we would get probably some kind of reaction out of this daily BPR. That was kind of my thought process going into the day. Is I thought going into the day, because once again, I think this daily SIBI will reject price, but not until we probably sweep this high. I thought this daily BPR could deliver price up to the daily SIBI. So once again, here's that daily BPR. It's also a 4-hour BPR. That's kind of what I was thinking going into the day. I did at one point lean bearish because I thought we were going to go sweep the lows, but that did not happen. So let's go ahead and screenshot all this. So screenshotting daily BPR, there we go. Now it's also worth noting this was probably also a 4-hour BPR, or no, it was a 4-hour breaker. That's what it was. So this was also a 4-hour breaker. So basically, I was anticipating us to get some kind of buy model off this breaker. I was anticipating likely to see some kind of buy model off of this 4-hour breaker, and you can see that's exactly what happened. Now, it is not so as easy as it may seem to use that to get an entry, right? You have to, you have to frame everything out, and easier said than done. But anyway, I'm gonna mark this out, right? You can see how this buy model is starting to frame itself here, and then as well, we end up sweeping previous day's low. So I'm gonna mark that out right here. This was a previous day's low sweep. So we got quite a lot going for us here. Once again, always easier in hindsight, but that's why we record it, because we want to get better so that way we can catch this in live time. So there we go. Previous day's low swept right there. Let's go ahead. I mean, this is a very, very clean buy model using this 4-hour breaker. Might have even been a 1-hour breaker. So something we'll have to look at. But once again, let's actually make another note. This was a daily BPR, 4-hour breaker, and 1-hour breaker. I was anticipating some kind of buy model off of it. Essentially, that's kind of what I was thinking going into today. Now, I know I was looking for shorts at one point, but that's kind of thought because I thought we need to sweep the low again first. But anyway, very clean buy model today in hindsight. Obviously, it's hindsight, but once again, this is how we get better. And so there we go, 4-hour breaker and buy model. So now we could drop down to 1 hour, right? And you can see even clearer here that we do have this entire series of up close candles. And actually, you'll know what's this, guys? Reaper for value gap. Look at that. Look at the Reaper for value gap on the 1 hour. That one's a clean, this is a very, very clean 1 hour breaker, right? With that Reaper for value gap and discount. Now, I used to think that this one was kind of good, but I'm starting to realize that you want to do the highest one. And so in this case, you want to mark out this whole thing. And, well, you can see that that entire thing is this 1 hour breaker, right? It's a series of up close candles, but nonetheless, that is still a breaker. So anyway, 1 hour breaker, look at that Reaper for value gap, and look at how we hold that. So that's one thing I did not see going into the day. I honestly should have noticed that Reaper, but that's a pretty good Reaper. You can kind of see how this buy model is forming now, right? Very clearly this was a buy model. 1 hour breaker, 1 hour Reaper. That was the exact low, right? Once again, guys, I'm never going to give up. Like this, the markets are too precise for me to ever give up. I'm literally never giving up. Like, I don't care how long it takes. I will be a trader. So, you know what I mean? Like, I don't care how many days I have to show up. I'm gonna keep doing it because it's just obvious to me. Like, these markets move in very, very systematically, right? So S&T with YM. Let's go ahead and screenshot this. Once again, we were starting to get this buy model framed. Once again, that Reaper for value gap. 1 hour breaker and 1 hour Reaper. Once again, you could have marked it as that, but since I want to do the highest up close candles, I chose this entire range. I think either one of those breakers work, but I think the best one was on the 4 hour. So anyway, that's gonna take some more looking into, which we don't have time for, but yeah, probably just use that 4 hour breaker, but you could use this one as well. 1 hour breaker and Reaper. So from here, we can drop down to the 15 minute. And now here on the 15 minute, here is the highest up close candles. And you'll note, so this is interesting. Yesterday, I was like, I think this one's going to be the most sensitive because this is the one that comes right before the violent move lower that takes liquidity. Then I found out that this one ended up being the most sensitive when we reacted here. But if you look at it like this, you could argue now this one held. So I think either you can make a case for both types, right? Where both of these, versions of the breaker ended up holding. But anyway, now we can pinpoint the Reaper down a little better, and well, we can see that specifically it was right there. That was where the gap was in discount. You see how perfect that was, right? So this is what I mean when I say I'm going to get very, very specific with measuring this breaker. I'm going to find where's this gap? Where's the gap in discount? It's right here. So that is going to be very, very sensitive. And then look at that, right? You see how sensitive that was? Perfect. Perfect. Market's perfect. If you take it, like, literally, like, the markets are perfect. And guys, I really do believe that, the market is always right. And if you take a loss, you got to learn from it, because I really do think that the market, if you don't learn from it, you're doing yourself a disservice, because I really do think the market is always right. So once again, 1 hour breaker, 1 hour Reaper. You see how this was a perfect buy model. I mean, genuinely, wow. So once again, I was bullish, but it's not as easy to take the exact entry as you might think, right? So we sweep out previous day's low, we had previous day's high above, and I guess previous day's high, since we sweep out previous day's low, previous day's high is a draw. So I really do want to get enough sleep because I think that's one of my missing pieces is getting enough sleep. And every single time I don't, I know I'm shooting myself in the foot for the next day. So I really gotta, rush through this. Not necessarily rush, but we gotta, make sure we get good pace so that way I can film the market recap and then edit my short form video and then go to bed. Hey, what up, Lost Guy? Thanks, man. I really appreciate you. That's awesome. That's so nice of you. I really do appreciate it. We're locked in, man. We're never giving up, dude. Look at how perfect these markets are. Look at that Reaper, right? These markets are perfect. I'm never giving up. I'm never giving up. I don't care how long it takes. I'm locked in, bro. I'm locked in. So we're gonna keep going. We got this. All right. So let's take note of this, right? Once again, here's this buy model from today where we had the 1 hour breaker and the 1 hour Reaper for buy gap, and we sweep previous day's low, sweep, then we go to previous day's high. See how perfect these markets are, guys? Like, we just gotta lock in. Like, the market, it's doing everything it does so purposefully, and I don't get how other people don't see it. Like, this is too perfect. It's too perfect, right? Like I said, you got to learn from your losses because, in my opinion, smart money runs these markets. And if you take a loss, you probably messed up. The market's always right. In my opinion, the market is always right. Anyway, let's keep going. So, okay, so from here, now we have this buy model. I'm curious, maybe there was a CRT because that could be helpful to, get us a bias. Not super obvious CRT so far. Yeah, I guess there was a 30-minute CRT here. This is the only CRT, but this is not that obvious. But, 30-minute CRT, I guess you could say you could target this. Once again, not obvious enough for me to even mark out if I'm being completely real. And I don't really consider this a 1 hour CRT. Maybe you could consider this a CRT, but personally, I don't really consider that a CRT. I don't think it's obvious enough. Maybe you could. I don't know. Not saying you can't, but I guess you could, right? You could say, okay, we close back within this range, so maybe mark this level out, and then I could see the case for how you could use this as a confluence, but I'm not betting everything down that this has to be an area, but to look for. But once again, right, you could consider this to be a CRT, maybe. So since we could consider it to be CRT, let's go ahead and mark out that. And once again, I feel like either the open or the close when of candle 2 to drag it over, I feel like either one of them, they serve as a good reference point for where to enter. Once again, candle 1 is this range, candle 2 we close back within that range, so then we mark out the open or the close, whichever one. Close would be a little even more accurate, but I think either one of these, dragging this out, would have been very, very nice. So we'll mark this out as a possible, Genesis model here, CRT high. You don't trade Forex? No, I don't. I just trade futures. It's just easier being in the US and stuff, but if Forex was just simple and easy and regulated and in the US, and I could trade it with prop firms, and if everything worked out perfectly with Forex, if it was, I don't know, there's just some reason that Forex is just a pain sometimes, and so I just don't trade it. Futures can be more straightforward when it comes to like regulation side of things, but anyway, you can consider this the CRT high. Once again, we're just outlining literally anything we notice. It's not a super obvious CRT, but maybe you could consider this a CRT. Maybe. Not something super obvious, though. I don't think it's obvious enough, personally. So, anyway. Not a super obvious CRT, but still noting. Let's move on, right? So maybe you use that as CRT, maybe you don't. I personally wouldn't. But once again, right, we sweep out previous day's low, we get SMT. Let's see, what else do we got here? I guess we could drop down even lower to the 15 minute. We also, I think maybe we rebalance this entire range. Oh, wow, we don't. But we do with this, right? So this is kind of what I was looking for initially, is for us to rebalance to equilibrium. And we do end up doing that. So you can see that happens here. Once again, we're just noting everything we see. We're just noting everything. Like, this is how we get better. We just make observations and trades we could have taken. So let's get into the actual trades we could have taken, because that's enough for bias. I gotta get going so I can film the market recap. So once again, push down into equilibrium there. So as for actual trades you could have taken, I was honestly noting that that there might be some kind of model off of this rejection block. I was honestly thinking it. Maybe it was a 30-minute rejection block. Let's switch it to 30-minute. Yeah, so this is interesting, right? We have this rejection block on the 30-minute. So I normally don't look at the 30-minute, but I think this one's pretty good. We have a 30-minute rejection block, and the thing about this, I'm just theorizing, right? The thing about this is we already know this is a high probability low of the model because we're below equilibrium of this range, and you know we perfectly tap that Reaper for value gap. So now we have a rejection block. It's just a, you know, once again, the 30-minute one, it's just super obvious, so I like it. So then I go to the 3-minute because the 3-minute aligns with the 30-minute, and then I guess here we have SMT with what, this low, lower low, and then this is a, oh, I guess it's both of them are lower lows. I thought there was SMT. Okay, it's definitely not obvious enough then. Dang, I thought that would be, yeah. Oh wait, low. Nope, they're both lower low. They're both lower low. I'm trying to make it work, but no. Okay, all right. Let's clean up the chart a little bit. So, I think we decided that the most obvious key level was that 4-hour breaker block. Right. This is the most obvious one. Now, I wanted to drop it down to a 1-hour one, but I mean, is there a breaker on the 1 hour that is obvious enough that we could use? I mean, maybe this one. Yeah, actually, let's just say we use this highest up close candle right here. Let's just say that we use this highest up close candle. So, right, 1 hour breaker. Let's say we mark it out like that. Look at how precise that is, by the way. Look how the market responds to this. So, I'm picking the highest up close candle. Specifically, so not that one, this one, right? See, this is the highest up close candle, so that's the one I want to use. The highest up close candle move lower before the move lower. That's the one I want to use. So anyway, you can mark it out with the wick, with the entire wicks, with just the body, just the wick and the body. Honestly, it's very, very, you know, they all the different ways to mark it out kind of give you different perspectives on the same thing. So just mark it out however you want, to be honest. So highest up close candle. Oh my gosh. My phone needs to not buzz so it doesn't fall over. Okay, actually, I gotta put my phone on the charger because it's gonna die. And it's like I'm genuinely working 24/7 because I get off work and then I come straight here, I start back testing, and then I gotta film, and then I gotta edit the video. It's like, I don't know. Obviously, it's like a lot, but I don't know what else to do. Like I feel like I gotta make time to back test. Otherwise, I'm never gonna get where I want to be. So, anyway, it's charging now. So, oh wow, what is going on with my mic here? Okay. So once again, the highest up close candle here, that's the one I want to use. Is the one to use. I used to think that it was this one, but I do think that the highest up close candle is going to be the most sensitive. So maybe you can measure it out like that, but honestly, either way, right? Whatever you want to measure it out as is fine. So let's move on. So with that being a 1 hour key level, I'm going to drop down to the 5 minute and see if there's an obvious 5 minute change in state. So drag this over, right? This is very similar to what I was looking at in the pre-market, but I couldn't decide on the key level that was most accurate. And that was the hardest part, and now we're learning, okay, the highest up close candle, that's the one. That's the level you want to use. So you can mark it out like that, right? So 1 hour breaker, the highest up close candle, that's the one you want to use. Let's mark it out one more time, just so it's very clear. I thought it was the one that came right before the drop, but I think it's the highest up close candle. Oh, what just happened? Yeah. Okay, back to screenshotting. Screenshot this. So we got to find actual specific trades. So for the market recap. So I guess let's drop down to the 5 minute. And this is where things get interesting. What the heck happens at 20 o'clock? Did we have news? What was at 20? Why did it do that? Something must have happened. It looks like a data wick. But anyway, let's just mark it as a liquidity sweep, right? I don't know if it was a data wick or not, but I'm assuming it was. We drop down into that Reaper for value gap. And guys, one thing I'm learning is I really do consider this a change in state of delivery. This, because even though it's not our typical up close candle on the lower time frame, this is up close candles, right? Anytime you have a low and then a high, a lower low, higher high, that's a breaker, right? So theoretically, this is still change in state, right? So this is something that I've been realizing, and something over time that's kind of started clicking to me is all order blocks are change in state deliveries, whether you think they are or not, right? I'm starting to realize that. And so look at that, right? 1 hour breaker, and then look at this change state delivery here. 5-minute change state delivery gets tapped 1, 2, 3 times. 5-minute change in state. And then, right? So this is stuff that I'm learning. And look at how precise this is, guys. You can't argue with this. This is precision, right? This is literally orders getting filled 100%. 100%. So what is this? Manipulation. Let's just call this a data low, because it looks like one. I don't know if it is, but there's definitely going to be a lot of liquidity below that because it's such an aggressive wick. I don't really care if it is data low or not, to be honest. It's just one of those things where it's like, it's really just not that complicated. If it looks like a data wick, even if it's not technically data wick, there's probably some reason it did that. That means there's probably liquidity below there. So I'm still going to call that data low. So then we get 5-minute change of state out of this level. And yeah, just once again, guys, look at how precise the market is. We induce this low into the change of state. I honestly would definitely consider taking this as a flow state inducement where, you know, you enter the trade at a limit order below this low. Now, I don't know. It's just kind of just a thought. But usually I like to do the inducement below the change in state of delivery. So this one happens above. Proud of you. Oh, thanks, Kirk. I really do appreciate it. Dude, we gotta just... I'm gonna keep showing up every single day because look at the perfection in these markets, Kirk. Look at the perfection in these markets. You can't deny the perfection, which is why I'm never gonna stop. Like, I'm gonna keep showing up every single day. I don't care how long it takes. These markets are perfect. These markets are actually perfect, and I'm gonna ignore every single one of you that say they're not. The market is always right. If you take a loss, you gotta learn from it. In my opinion, the market is always right, and there's a reason for why it's specifically doing what it's doing. Look how perfectly we react off that Reaper. Look how perfectly we hit that change in state of delivery. It's just, I mean, maybe not all. Maybe you know, there's times where, you know, you mess up, but that doesn't mean that there wasn't a reason for what it did. Usually there's, you know, smart money runs the market. That's just the reality of it. So, anyway, inducement of these lows, inducement of this low. And so, we induce that low into the change of state. So, honestly, I might need to make a new name for this type of trade because normally when I say it's a flow state inducement, I enter as an inducement below the change of state delivery, but this time, right, I'm entering inducement above the change of state delivery, which is not normal. But I don't know. I kind of think it's okay in this context. Just a thought. So I guess let's just still call it a flow state inducement because, you know, even though it's not like below the change in state, like you're still kind of taking this as a flow state is really what you're doing. And then maybe target price stays high. Okay, I'm just going to call this flow state inducement even though it's not your typical one, right? And then you can see we drive up to price stays high. Kind of cool. So yeah, flow state inducement. you know, this is an interesting one. You could have your stop loss. This is kind of tricky. I don't know. This is where it gets to be subjective, but you know, I'm just gonna say, um, you know, below that swing low is fine. Once again, though, realistically, this is not a realistic trade. I'm just showing, going over everything I think, one thing at a time, and this is the next thing I thought. So once again, 1 hour breaker, 5-minute change state. Let's actually measure out standard deviations. Once again, why am I considering this a change in state? Because it literally is. These on the lower time frame, these are up close candles. So this is change in state, even though it doesn't look like it, right? It's a hidden change in state. It's literally called the hidden order block in Hopalopka's book. So, and yeah. Anyway, I think this is good as a flow state retest. You could even target the third standard deviation as well. Let's say you target the third standard deviation because, you know, it's got good low resistance highs above. Right? Obviously, I'm saying you would scale out here, but I just want to show you how, like the final, where you could target as a final TP, right? Once again, these are difficult trades. I'm not saying that these would be easy to catch, but what I'm saying is the market is doing what it's doing very intentionally, and there was a reason why it did what it did. That is what I'm saying. Not saying it's easy. If it was easy, everyone would do it. It's not, but it is intentional. And you see how we finished that buy model up to that high. So look at all this, right? All of these are fillings of orders, right? This is all fillings of orders at the flow state entry. Orders getting filled right there. Now, yeah, you could use this CISD, and that actually ends up working, right? Look at that. You see how that ends up working later on? And that's fine. I'm not saying that you can't do that, but, you know, this one gets you in way earlier, so. Was there SMT at the lows? Yes, there was. There's SMT. I should probably mark that, huh? Yeah, there's SMT with YM here. So. So, buy model. And then let's also take another screenshot and call this flow state inducement 1 hour, 5 minute, 9:45. Not saying it's a realistic trade, but, you know, 9:45 flow state inducement 1 hour, 5 minute. And once again, just the context of the trade is the reason for the stop loss right there, right? We've already got orders filled here and here, so I'm basically saying we should not go below those spots if they're filling more orders. Is kind of what that's the reasoning for the stop loss here. Okay, sounds good. Stop. So once again, stop loss at this low because they were already filling orders at these lows. So I'm basically just saying I think this inducement should hold. Right. So once again, conceptualizing your understanding of the markets is important. But once again, I'm gonna try and move on because I got a lot to review and not a lot of time, and I want to do the market recap in probably 30 minutes. So. So, stop loss, stop process. Once again, not a normal flow state trade, but every single day, every single trade is different, and so you have to understand the context. And I think trading based off of that context is important. That's just my thoughts, though. You can disagree with me, and that's fine. Anyway, let's move on. So SMT with YM. So let's drop down lower time frame. Once again, we're drawing up to previous day's high here, LRLR. Look at our time levels. Look at that. Look at that. Look at our time levels, guys. Look at how this inducement occurs below all of our time levels. This is why I preach time levels are so valuable. This inducement at 9:45 occurs below all of these time levels. Midnight, true day open, and we have 7:30 true session open. And then we also have 9:30 and 8:30. And yeah, look at how the manipulation goes below all of these. It's like they're basically just a reference point for smart money to determine if we're in premium or discount. Are a reference point for smart money to determine if we are in premium or discount. The inducement goes below all of these time levels. You get what I'm saying? You get what I'm saying? It's just a reference point. So this inducement into the change state delivery occurs below all these time levels, meaning it's a good confluence. So bang, right? So anyway, like I said, I personally think time levels are very valuable. Why would you not use them? They're just going to be an extra confluence. Why would you not want to have that? So I'm just going to mark this out as time levels valuable today. Time levels were valuable today. And then let's see. What else do we look at? New day opening gaps. Nothing obvious. Maybe you could say this was a draw on liquidity, but not like really crazy obvious. What about new week opening gaps? Yeah, once again, nothing insanely obvious. What about RTH gap? Yeah, we close lower, we fill it pretty much instantly. I meant we open lower.
I'll be right back. I'll be right back.
So, the other thing we can look at is SMTs. So, what's this inducement with SMT? I'm curious. Let's go look. So it was 8:15, 9:40. Yeah, 9:48. 8:15. And you know what? I think that was a 90-minute cycle SMT. Yeah, because why is this 90-minute cycle SMT? Once again, I'm not calling them SMTs because I don't want to. I mean, it just overcomplicates it. It's just a 90-minute SMT. Meaning, we have SMT. If you split 6 to 12 into 4 90-minute cycles, you'd have 6 to 7:30, 7:30 to 8. The low between 7:30 to 8 is right here. The low between, 7:30 to 9 is right there. The low between 9 and 10:30 is right here. So, 90-minute cycle SMT. And we're below all of our time levels, too. Guys, I'm just going to say it. Quarterly theory, it is very precise. I mean, look at this time levels. Look at how we have SMT on the 90-minute, and then we expand. It's pretty cool. Once again, just making observations. And I like marking it out in the context that I understand it, right? I might not understand it as a sequential SMT, but I do understand that it's SMT with 90 minutes at a time. So that's what I'm going to call it. Screenshotting this. I need water now. I think maybe Jan was talking about this. Yeah, 90-minute cycle SMT. Once again, I don't need the quarterly theory indicator to be able to tell that we got a 90-minute cycle SMT. You just look at the time. Okay. Where were we? Let's walk. Let's come back here. Yeah, 90-minute cycle SMT. Let's see if there was SMT with this low, right? Because then that would be London SMT, right? We have a low. A low. Now we have SMT between Asia and London, right? So Asia SMT, then we have 90-minute SMT here. So the SMT right there was with Asia. Once again, just noting everything I'm seeing. Kind of a tricky day, though, today. I'm trying not to have this go out too long. So now we have to figure out, okay, what trades could you have taken? You know what? This inverse value gap, if I had known that we had a sequential SMT at the low, we had a inducement, and we were delivering from a 5-minute change state delivery. If I had known all those things and we dipped below all these time levels, I actually really would have liked this this inverse value gap. But unfortunately, I did not see all those things in the moment. But in hindsight, you know, I guess technically there's a 3-minute gap, so you might have to wait for the 3-minute to inverse. Let's just call it a 2-minute inverse value gap, and we'll just say we front ran it. What does a 1 minute look like? Let's just say we front ran it because of conviction. Because once again, there's a 3-minute external gap, but I'm gonna have mark out both, right? We have a 2-minute inverse value gap here. Oh, and we could even take a Jan entry. That would have been the trade of the day, actually. Now that I think about it, that would have been trade of the day. If you just took a Jan entry off of this inverse value gap on the 2-minute. So yeah, we dip below all these time levels into our 5-minute change state delivery with 90-minute cycle SMT. So, bang, right? Inverse value gap to the upside. Wow, that is so clean. Oh my gosh. And then yeah, we run these low resistance highs here. I'm gonna draw this out like this. Bang. And yeah, we run up to those. So we could mark this out as a 2-minute inverse value gap. So once again, this would be front running the 3-minute external gap, but we're just gonna first mark the 2-minute version, and then we'll mark the 3-minute version. So this is 952 IFEG 2-minute, and then in brackets I'm gonna put front run, meaning front run meaning there was a higher time frame gap that you entered before it inversed. But then we'll talk about the 3-minute one, right? The 3-minute one happens here. This one, actually, I'm not even gonna lie, I don't even think this 3-minute is worth taking because the RR is no. I just not. When we get the entry and we're already back all the way up in premium, I personally would not take this. Maybe it's worth it for someone. Not really worth it for me. I'm not gonna lie. But should we mark it? I don't even know. Personally, I'm not even gonna mark it because up to this, which is the first target, not even 0.7R. That is no. I'm not even gonna mark it. But this 2-minute was really, really good. Like the best way to take this was to wait for a retrace, and then when you got a retrace, you can take this as a Jan entry, right? We wait for a retrace, and then we enter after we've already gotten the inverse value gap. I call this Jan entry. And guys, this is some secret sauce right here. Where's the Jan entry? So yeah, so taking this as a Jan entry up to the LRLR, that's 2.87. Once again, we would have conviction in front running the 3-minute gap because all these time levels got swept. So what is this? 952 IFG-J 2-minute, and then front running 3-minute. I'm starting to get good at the notation, to be honest. Like, my notation in my notes is actually pretty consistent. Okay, then let's say you held this. What could you target? Well, nice liquidity pool here, right? This is what I would target. I would target this liquidity pool. And that would be my final take profit. And look at that. Look at that. Beautiful. That would be my final final take profit. Now, once again, it's very hard to see all that in the moment. I think today was kind of more of a difficult day, if I'm being completely honest. But I like learning, even if I'm not even, I can take what happened today, even if I wasn't able to catch it in the moment, I can learn from it for the future. So we continue up to that. And you'll note when this happens as well, right? This is at 9:50, which is going into our 10 a.m. macro, right? So that's kind of cool. Once again, it's kind of chaos with all these time levels, but I do think that all these time levels are important because it's showing they're all a reference point for the manipulation, and we manipulate below all these important key times, so it's saying we're in discount relative to all these times. Does that make sense? That's why I have all those times. So anyway, that'd be kind of like the final area to target up to that. That'd be 4R. I'm not saying I would catch this, but I like to take note of things like this so we can learn from them and get better. I mean, that's all trading is even if you didn't catch something in the moment, You look at the market, you understand it, and then you use what happened in the day to get better. So, okay, we gotta redo the screenshot. Let's redo the screenshot because I wanted to have the words for Jan entry right there. So, okay. So, oh dang, there's 5 people watching. Let's go. So, I really do want to get to filming this so I can edit the market recap and go to bed, because my main issue right now is I'm not getting enough sleep for trading, and that's actually a big issue. So, even if the market recap's not perfect, I just want to make it. And then, there's your bed. Because I do not get enough sleep. Okay. So once again, 952 inverse for value gap. IFG-J, meaning Jan entry, meaning I'm entering after a retrace after we inverse the fair value gap. And then front running the 3-minute external gap. And then this is showing how you could take profit at, you could leave a runner to target those other highs, or the liquidity pool above. So, bang. Yeah. Cool. What you eating, my boy? My family went to Chipotle, and so they got me something. It was nice of them. But, oh my gosh. Okay, let's move on. Let's move on from this, right? Let's honestly just delete all that. I'm actually gonna go to the bathroom real quick. Oh, wow, there's 6 people. Okay, I'm just gonna get more water and then I'll be right back. But yeah, I probably got to wrap this up because I do want to film the market recap, but then again, I haven't looked at everything that I need to look at. So, let's just keep going. So, once again, today was kind of hard. The trade I took was, we had the first presented for value gap right here. So, I don't know if I marked this out yet or not. The trade I tried to take, once again, didn't end up executing, which is super annoying. But we had the first percent for value gap here. And note right here how we back test it. And note how we have this entire consolidation below. All this is going to be low resistance. So what I was going to do is, what I tried to do is I dropped down to the 5 second, which is what aligns with the first presented for value gap. And then, enter on a 5-minute change state delivery to go target those low resistance lows. But it did not execute, and I did not, I put a limit order instead of a limit sell. So, literally misclick cost me 3R, so I was really upset. But go watch the stream if you haven't seen that trade. That was a pretty cool trade. I'll talk about it in the market recap. So, once again, I don't normally see how many people are watching because normally my chat is working, but my chat is not working right now. So, let's just keep looking around, moving on. Once again, same thing. This is a 30-second 2022 for value gap. Why? Because of liquidity. It's because we have an obvious accumulation range below. So, when we break this low, once again, it's not a 2022 model if there's not good liquidity to go run. we have a liquidity sweep. So once again, what is liquidity sweep? Manipulation. So there's the manipulation. Then we have a break of structure right here. Liquidity sweep, break of structure right here. And this is in, if you measure out this displacement leg, we look for value up some premium of it, right? And then we go run the low resistance lows right here. All of these are low resistance. You see how perfect these markets are? It's very, very intentional. So I think that was a good trade, I'm not gonna lie. Had I had seen it, but I did end up trying to take a trade down to the low resistance lows. I just didn't get my execution. So this is a possible trade you could have taken. Once again, we end up going lower to get orders filled at the change of state, and then you know, that ended up being a higher time frame inducement. Once again, I would not really target all the way down there. I target like that. That's 3R. That's pretty good. Once again, though, realistically, I always look for low time frame change of state deliveries off these gaps because I'm very, very precautious. And so that is what I tried to do live. You guys saw me try and do that live. It just did not execute my order. And I was so mad. Um, 946 2022 model. This was on the 32nd. At this point, right, we sweep all that lows, inducement, consolidate. We don't really move on until we sweep all these lows again. Nothing obvious. I'll say this. In all this, nothing was obvious. You know, I'm not going to lie. This thing that I messed up on, right, this was forced. It was forced because, well, obviously I was upset that I missed this low resistance liquidity run. And so, you know, I have to make a new rule to understand, like, a misclick trade, I still need to count as a use of a trade so I can go on that post-trade walk so I can reflect and relax and reset. Because if I don't count a misclick trade, if I just say, oh, that wasn't a trade, let's just roll into the next thing, my mind's not reset and I'm going to take something stupid, right? So it's a new rule I'm making is if I misclick or calculate risk wrong or whatever, that's going to count as a real trade for me. I mean, not necessarily count as a real trade in my journal, but as far as like post-trade walk and stuff, I'm going to go on the walk. TGR took that trade. What trade? What trade did he take? Tell me the time and the trade. But yeah, all this is essentially consolidation here. Nothing in here is high probability. I think I know what trade TGR tried to take. So yeah, and nothing here is obvious. Something that is decent that I will admit is not bad is, once again, this was a 2-minute inverse for value gap. So you could go on the lower time frame after we get that inverse for value gap and maybe take a scalp up to here. It's a possibility. Let's look at that. So consolidation, nothing obvious in here. So for those who don't know what I'm talking about how this 2-minute inverse is right here. So this entire thing is just a giant inverse for value gap. Now there was a 3-minute gap, but there's a lot of reasons to anticipate that 3-minute gap to get broken because we sweep all the time levels, we induce into an order block. So with all that in mind, 2-minute inverse fair value gap right here. So now I'm going to drop down to the lower time frame. And on the lower time frame, this is just a liquidity sweep. Right? Liquidity sweep. And then break of structure of this high. So you see how everything kind of fits together like a puzzle almost, right? Liquidity sweep, break of structure, and then fair value gap. Kind of curious if this was in discount. It wasn't, but like I said, right? Well, I guess it was if you... Oh, that's interesting. From here to here, we do tap equilibrium. That is interesting, right? This is why I backtest, because it's like, now I know that sometimes this leg is going to be useful. So you can see it was useful right here. So it's not always the displacement leg you need to measure. Sometimes you want to measure the manipulation leg. Okay. So anyway, there we go. So once again, 2-minute inverse fair value gap. So now I'm going to drop down a lower time frame because we have this. Essentially, this is a 30-second fair value gap here because I'm going to mark it out from this high to the high. So once again, the reason I'm not marking it out with this is because technically, right, this is the true gap in the paint. You know what I mean? This is the true gap from this high to this low. So here's a 30-second fair value gap. Now this is kind of a stretch because if I have a 30-second, maybe it might need to be a 1-minute fair value gap. Let's look at that. Yeah, see, the 1-minute one doesn't seem obvious to me. So the issue is 30-second as a key level might be too low. I was going to say we could use this as a key level to find a change of state, but it might be too low time frame. Let's look at it. Yeah, it's too low time frame. Anyway, you kind of get what I'm saying. Yeah, the short, but didn't take a partial and took 40K loss in his personal. He was waiting for both London and Asia low. Yeah, I saw that. I saw that. Someone sent it to me. I feel bad. That sucks a lot. Yeah, and then, you know, we expand up higher. We could probably film the market recap. Once again, nothing in here is obvious. We push up to here. At this point, we're in a gap. At this point, we're in a gap, right? This is clearly this is a gap. And a breaker. It's a nice looking breaker, actually. Right? Ooh, that void here. Let's see if that's a Reaper gap. Yeah. That is awesome. Wow. See how this breaker, right? High, low, higher high, lower low. This void here is a Reaper gap, and then bang. I'm loving these Reaper gaps, to be honest. So once again, right, this is like a 15-minute breaker. Reaper got hit. So if it's a 15-minute breaker, let's look for a 1-minute change state. We push into the Reaper right there. Nice little accumulation, manipulation. Right, you see what I'm saying? Accumulation. We should probably move on though. I should probably just film the market recap. I want to start getting enough sleep. And then the obvious change to delivery is right here, honestly. You could use this one, but this is the obvious one. It's about like that. Now I'd actually consider using this as this for standard deviations. That's so perfect. Wow. Yeah. Goes to show, if you really know what you're doing, you can destroy these markets. Like, this is very, very precise. Then equal lows here. Once again, here's the 4th standard deviation. That's the most realistic target. And obviously you have first, second, and third that all get hit here. Let's measure out this range actually. Where's the liquidity pool? That's honestly, wherever the liquidity pool is where I would probably target. Let's just look. Okay. So it kind of ends right here. You can see how this liquidity pool ends right here. So I would probably just take profit all here. So, but I do want to show that we do keep going lower. Once again, why did the market stop here? This is a gap in transactions. This is literally a fair value gap visualized with volume. So anyway, right? Bang. So let's just go ahead and film. Guys, I'm getting really tired and I want to be done. But we got to keep going. We got to keep going. The market, you know, as much as tired as I get, like, I'm not going to get where I want to be if I just keep, you know, not doing everything I need to do every day. It's my own fault. So, and the nice thing about this change in state right here is, yeah, you can put your stop loss here. You can put it at the end of the body. And then, yeah. So yeah, bang. You also are inducing a high. You see what I'm saying? You're inducing this high. Once again, I would just target that liquidity pool. I'm just being realistic, but I do want to show how this does end up going all the way to those equal lows there. So accumulation, manipulation, and then into the Reaper, and then 1 minute change in state. That, once again, I wait for the obvious change in state. I'm not just gonna enter any change in state. I'm gonna wait for the obvious one. And for me, where is that for me? For me, it is not here. I mean, sure, you could take that there. This one does end up working out. Nothing totally wrong with that, but I waited for this one, and yeah, that one works out too. So yeah, I think, past this, there might have been more opportunity. Kind of just want to film the market recap though. So anyway, we'll probably just film the market recap. Well, we could look real briefly here. One nice thing about this is these equal lows are a really nice liquidity pool for a 2022 model. Oh, you know what? Oh, it was the PM macro. It was the end of it. Anyway. 1258. Flow state. Retest. 15 minute, 1 minute. Okay. There's so much. I feel like we got enough to talk about for the market recap. I should probably just move on. I should probably just be done. Yeah, I gotta be done because I'm not gonna have enough time to do everything I need to do. So, okay, let's just briefly look and see. Was there a 1 minute per value gap that formed here? Not really. What about 30-second? Not really. Okay. And then yeah, we push up into this gap. We go lower. Once again, smart money still targeting this liquidity pool, so we induce this low, and then we finish the job. Okay, I think that is going to be it for this review session. Essentially, once again, just a giant buy model today. And yeah, probably just going to film the market recap now. So I'll see you guys